Welcome back to the Malaysia Money Matters show. It's March 26, 25, and we're diving straight into the news. You know, the stuff that's shaping the Malaysian economy and your financial outlook.
Absolutely. Got to stay informed.
Then we'll zoom out a bit, look at some international developments that tie into our financial landscape.
Excellent. Global context is key.
So, ready to jump in?
Let's do it.
Okay. First up, Malaysian company news.
Right.
Prime Minister Anwar Ibrahim he's really highlighting that 5.1% GDP growth for 2024. Big jump from 3.6%.
Quite a leap.
And apparently it beat all the forecasts. He's saying it's all thanks to those economic reforms, pointing to the highest domestic investments in a decade.
That's a strong indicator.
Yeah, it really shows confidence in Malaysia's economy, right?
Yeah, definitely. And that record, RM 4.2 trillion for Malaysia's capital market, growing by almost 11%, that backs it up.
Right.
But, the PM himself admitted there's still work to do.
Yeah.
Like, we need to boost productivity, make sure we're competitive, and build that economic resilience. The Madani economic framework, that whole focus on inclusive growth, tells me they get it. Growth needs to benefit everyone.
Right. Not just a number on a page.
Oh.
Now, let's talk about, UK-based Aberdeen Group. They've become a big player in Eastern and Oriental, the property developer, boosted their stake to over 5%, bought a whole lot of shares last week.
Interesting. It looks like they see long-term value in E&O, maybe their land bank, or future development plans. But looking at their latest financials, it's a bit of a mixed bag,
Yeah.
Their net profit for Q3 actually dropped 10% year on year, even though revenue shot up 82%. Big jump.
So why the drop?
Well, their tax expenses doubled, ate into the profits big time. And for the first 9 months of their financial year, net profit barely moved, less than 2% increase. Forex losses offset that big revenue growth.
Currency fluctuations always a factor.
Always. But hey, E&O has big plans, launching 3 projects on Andaman Island, RM 1.63 billion GDV.
GDV.
Gross development value. Basically the total estimated sales value once the project's finished. And they're standing in the Klang Valley. Unbilled sales are at a record high, RM 1.46 billion. So, profitability might be squeezed now, but the future's looking pretty good.
It's a complex picture. Now let's shift gears, AirAsia. They're aiming to be back at full pre-pandemic network capacity by end of 2025, planning over 30 new routes.
Wow, that's aggressive.
Very. But it shows they're confident about the travel recovery and they're making smart moves, expanding into Central Asia, building on that Kazakhstan route. New service to Tashkent, Uzbekistan, more flights to Kazakhstan.
Smart. They're riding that fly-through service wave, via Kuala Lumpur, of course.
Exactly. And they're improving those Australia flights, Melbourne and Sydney. Better timings, more frequent. Plus, a new route to Darwin launching in June. Started that Bali-Darwin service recently. More capacity for Japan during peak seasons. They're not messing around.
No, they're covering a lot of ground. And that network optimization they're planning, second quarter 2025. Plus, exploring new routes within Asia. Because visa policies are easing up. China, India, those big markets. By the end of next year, they're looking at 234 aircraft. Full recovery, both fleet size and network.
Okay, let's talk about Astro. Threefold increase in net profit for the full financial year. Sounds amazing, but their Q4 actually dipped. What happened?
It's all about looking closer. That huge profit jump. It wasn't from their core business. It's because their finance costs and amortization went down.
Yeah.
That Q4 dip tells a different story, though. The challenges they're facing, changing media habits, tougher competition, those are still there.
No dividend either, right?
No.
They're saying focus on new customers, new ventures, and cutting costs. OTT platform has a decent user base, 1.2 million monthly active users. Free cash flow looks good, but their share price is down quite a bit year to date.
Media's a tough business. Astro's feeling it.
Yeah.
Focusing on that OTT platform. Smart move. Got to adapt to how people consume content now. No dividend. Might worry some investors. Shows they need to reinvest, tackle those industry changes head on.
Here's something that hits closer to home. The MDA, that's the Medical Device Authority, they've banned online sales of optical devices, contact lenses, e-commerce platforms, everything. Why the crackdown?
Public health, plain and simple. Vision care is important. Those devices, they're regulated. Medical Devices Act 2012, Optical Act 1991. They need a prescription from a qualified optician or optometrist, and they need to be dispensed properly by those registered professionals.
Right, can't just click and buy.
Exactly. The MDA, they're saying those devices have to be registered properly. Online sales. Can't guarantee that. There's no more online ads, no more online sales, and they're serious about enforcement.
How serious?
Fines up to RM 200,000. Imprisonment up to 2 years. or both.
Wow.
Yeah. They want people to report any illegal online sales they see.
Construction sector now. Bonastra had a stellar Q4. Profits and revenue way up, and they're giving out their first dividend in 7 years.
That's a comeback story. 63.2% increase in quarterly net profit, revenue up 73.9%, more construction, 12 new projects. That dividend, it's a sign. Back to profitability. Good times ahead. Investors love that.
Full year profit more than doubled too. Order book at RM 3.6 billion. That's earning visibility for the next 4 years. Easy. And they're going after more contracts. Growth, growth, growth.
Yeah, they're riding high, solid foundation for the future. More contracts mean even more growth. And the dividend shows management is confident about what's coming.
KPMS, they're making moves. Partnering with a Taiwanese aerospace company, manufacturing aerospace parts, expanding their renewable energy business. Diversification.
Smart move. High growth sectors, huge potential. That Asia-Pacific aerospace market, it's going to be massive by 2025. US $400 billion. And their experience with power electronics, that's going to help them as they move into microgrid solutions.
Yes, Southeast Asia, rural Australia, they're targeting those areas. Plus, they want to up their game in submicron precision manufacturing. For medical scientific applications, it's a big change.
It is. But they have the skills. And they're partnering with a solid player in aerospace. This is about long-term growth, not putting all their eggs in one basket.
Let's talk money. Capital A, specifically AirAsia Aviation Group, they're in talks to get RM 1 billion in ringgit-denominated debt financing from a domestic bank. Why is this a big deal?
Refinancing. Those US dollar loans they took during the pandemic, expensive. Interest rates are high. Switching to ringgit financing, immediate savings, lower interest costs. Their bottom line is going to thank them.
They're also checking out the bond markets, more refinancing options, and they got approval from Bursa Malaysia for their plan to get out of PN17 status. By May, capital reduction, restructuring, the whole works. They had a lot of that US dollar debt, high interest rates. Refinancing is key to getting back on track.
Absolutely. PN17, that's a red flag. Means a company's in financial trouble. They need a solid plan to recover, or they risk getting delisted.
Right. So, exiting PN17, that's a big win for Capital A. Shows they're improving. Refinancing that US dollar debt will strengthen their position. Less debt, lower interest payments, more profit. Good news all around.
Agreed.
Telecom time. CIMB Securities is feeling good about CelcomDigi. They say the company is on track to meet, maybe even beat their EBIT guidance for this financial year.
EBIT. Earnings before interest and taxes. Basically, how much profit they make from their main operations.
Yeah.
And CIMB is optimistic. Why? They're expecting those cost pressures from the merger to ease up. Network integration, IT system consolidation, all that.
Right, and most of that network consolidation will be done this year. And integrating those IT systems, apparently that's going to be cheaper than the network integration. Plus, they're talking to the MCMC about reducing spectrum fees.
If that happens, big savings. This year, next year. And here's the interesting part. All that capital expenditure, all that spending, they're still committed to dividends, keeping them steady, maybe even increasing them. Long-term cost savings will help with that. Investors love steady returns.
Now, for SciPark Resources, analysts are predicting a revenue surge in Q4. What's the story there?
The tipping fee. That's what they charge for processing waste at their Nigeri Simbalon waste-to-energy facility. The government just approved a near tripling of that fee, bringing it in line with the proposed rate for the Sungai Udang plant. Big jump.
Analysts are saying this could add anywhere from a few $100,000 to RM 20 million per year. And there might be retroactive adjustments going all the way back to April 2023. Plus, their Ladang Tanah Merah plant is back in operation. Good timing.
It is good timing. But analysts are being cautious. Neutral to buy ratings. They want to see those Q3 results. Make sure that plant's performing well after the fire incident.
Let's move on to Dayang Enterprise. They just scored 3 work orders from Petronas Caragali for accommodation workboat vessels. Over 1,000 days of service with possible extension. That's a big win.
It is. Long-term contracts, stable revenue.
Yeah.
And the Employees Provident Fund, the EPF, they're back as a major shareholder, over 5% after a recent share purchase.
So EPF's a big player now. Name Holdings is still the largest shareholder, though. Interesting changes.
Definitely. And when a big institutional investor like the EPF comes back, that sends a signal to the market. They see potential in Dayang.
Malton, the property developer, they signed an MOU with a Chinese.
Interactive displays, digital billboards, maybe even those immersive LED experiences, enhancing those properties, adding value. But remember, an MOU is just the first step. It's a 12-month agreement. They need to figure out if it's feasible. if there's demand.
Okay, last bit of Malaysian company news. Matrade, the trade folks, they have a target. Increase Malaysia's export value by 5% in 2025. RM 1.58 trillion. They hit the RM 1.5 trillion target last year, so.
Ambitious, especially with all the global uncertainty.
Yeah.
Geopolitical tensions, that tech war, especially with the U.S., Matrade knows it's tough. They'll need new strategies to navigate all that and reach that target.
International news now. The U.S. Fed's interest rate outlook. Seems like things are changing. The Atlanta Fed president now says just one rate cut this year. He was predicting two before. What happened?
Tariffs. He says those tariff hikes are going to slow down disinflation.
Yeah.
So inflation is going to take longer to get back in that 2% target. Now he's saying early 2027.
Wow.
Yeah. And all that uncertainty about what a future Trump administration might do makes forecasting tough. He's lowered his GDP growth expectations too. Unemployment rate's going to be a bit higher, he thinks.
So tariffs are the big worry.
They could push inflation up even more. On the other hand, weaker sentiment could lead to layoffs. It's a balancing act. Another governor, Adriana Kugler, she's saying hold steady for now.
Interesting.
Yeah, she sees those inflation expectations ticking up, goods inflation too. And she thinks the Fed's policy is already doing its job, slowing things down. So wait and see, she says.
U.S. President Trump, he said those auto tariffs are coming. Not all of them right away, though. But he did slap a 25% tariff on countries buying oil and gas from Venezuela, starting April 2nd. What's he trying to do?
Reciprocal tariffs, that's what he calls them. Basically, you hit us with tariffs, we hit you back, trying to fix the U.S. trade deficit. Those sector-specific tariffs, autos, pharmaceuticals, semiconductors, they're still on the table. But they're focusing on the countries with the biggest trade surpluses and the ones with a lot of barriers to U.S. exports.
Southeast Asia now. RHB Research, they think Indonesia is sticking with that B40 biodiesel mandate. 40% palm oil blend. What's that going to do to palm oil prices?
Push them up. RHB says expect high prices throughout 2025. Indonesian palm oil supply will be tighter, exports down about 7%. They're bullish on the plantation sector. They even think their CPO price forecast, RM 4,300 per ton, might be too low. Prices have been higher this year.
And to help with that B40 program, Indonesia is going to raise that CPO levy to 10%, right?
Right. More money to subsidize biodiesel production, keep it affordable, even if crude oil prices drop, keeps that demand for palm oil strong.
The Indonesian rupiah, it took a tumble recently, weakest it's been since the Asian financial crisis. Then the central bank stepped in. There are worries about President-elect Prabowo Subianto's spending plans. What's the market thinking?
They're nervous. That weak rupiah, the drop in Indonesian stocks, it shows concern about government spending, what it might do to fiscal stability. Those rumors about the finance minister resigning didn't help. And foreign investors, they've been pulling money out of Indonesian stocks all year. Not a good sign.
Some good news from Indonesia, though. XL Axiata and Smartfren, the merger's on. Shareholders approved it. Creates Indonesia's third largest telco. Big deal.
Huge subscriber base, a real force in the market. Axiata and Sinar Mas, they're the joint controlling shareholders now. And Axiata's selling some shares, raising cash, paying down debt. Smart move.
China's central bank, the PBOC, they're changing how they price those one-year policy loans. Could mean lower borrowing costs for banks. How does that work?
Flexibility. They're allowing qualified banks to pay different interest rates for MLF loans. MLF, medium-term lending facility. Basically, it lets the PBOC tweak the cost of borrowing without making a big show of cutting benchmark rates. Market rates have been lower than the MLF rate, so this makes things a bit easier for banks. It's like a stealth easing of monetary policy.
Okay. Oil prices, they've been climbing. 5 days in a row. Everyone's talking about those U.S. tariffs on Venezuelan oil buyers. Supply worries.
Exactly. Those tariffs, plus the sanctions on Iranian oil and the extension for Chevron in Venezuela, it's all adding up. Analysts think it'll tighten global supply, push prices higher.
But OPEC plus TA, they're still planning to increase output in May. Doesn't that seem a little odd?
They're walking a tightrope,
Right.
trying to balance supply and demand. Some countries might want to get their production back to normal levels. It's a small increase, and they'll be watching the market closely.
Last one. Copper futures. They're at an all-time high. Everyone thinks the U.S. is about to slap tariffs on copper imports. What will that do?
Well, it's already making a difference. The price difference between U.S. copper and London copper, huge. Makes importing copper into the U.S. very profitable. Goldman Sachs, Citigroup, they're both predicting a big tariff by year-end. The market's reacting, driving up prices.
Okay, let's bring it back to Malaysia. Analysts are saying those U.S. Liberation Day tariffs, they could be a problem, even though Bank Negara Malaysia just released some pretty optimistic growth projections for 2025. So how worried should we be?
Those B&M projections, they probably didn't include those new U.S. trade measures, those tariffs on buyers of Venezuelan oil, India, China, big players. A lot depends on how they react, how strong their economies are.
Right. Malaysia's exports are fairly diversified. We're part of that global tech supply chain. That might protect us a bit. But if trade barriers keep going up and geopolitical tensions keep rising, that's bad news for everyone. Could hurt our exports, slow down growth, and all that uncertainty. It makes businesses hesitant to invest, makes people think twice about spending.
Exactly. It's a global game, and those ripples can reach us even if we're doing things right. But there is some good news. Analysts like what they see in the Malaysian banking sector. Stress tests show they can handle some serious economic shocks. So that's something.
So that's the rundown. Key financial news, Malaysia and the world. Growth, corporate shakeups, trade wars brewing, lots to think about. Hope this deep dive gave you some insights. If you want to stay on top of things, make sure you subscribe to the Malaysia Money Matters podcast. And here's something to ponder. With all this change happening, how will Malaysia navigate the next year? What opportunities are out there? What challenges are coming? Think about it. We'll see you on the next deep dive.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.